Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. Could your favorite Mediterranean restaurant company be a good investment? In this video, we will be analyzing if Cava Stock is a buy. Could Cava, stock ticker symbol CAVA, be ready to rebound higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Cava. Cava was founded in 2006. They are a Mediterranean fast casual restaurant chain known for their customizable bowls and salads featuring fresh, high-quality ingredients. With a focus on Mediterranean flavors, they offer a variety of options including chicken, beef, vegetables, dips, and sauces. Cava has grown significantly and currently operates numerous locations across the United States. With approximately 7,000 employees, Cava is headquartered in Rockville, Maryland. Now let's look at the price action. Starting with the one-year chart, we see that Cava had a CAGR of about 144%. Zooming out to the 5-year chart, we see that Cava had a CAGR of 93% over the past 2 years. Cava has been a rocket ship, with the share price growing higher and higher. Shareholders are in love with this company. Now let's hop over to market share and take a look at Cava's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under restaurants and see that Cava is categorized as a fast food restaurant company. Expanding the fast food tab, we can see that Cava has the third smallest market share of the companies in this category, but is quickly growing market share. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Cava, CAVA, and see that the market share is only 0.11% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Cava commands a very small amount of food spend but has been growing market share quickly. The 5-year market share CAGR for Cava is 18.41%. This means that Cava's market share is outpacing growth in the wider industry. If we start in 2020, we see that the market share was 0.06%, 0.07% in 2021, 0.07% in 2022, 0.09% in 2023, and 0.11% over the trailing 12 months. Like other top-notch restaurant companies, Cava is actually accelerating its market share growth. Let's take a look at the fundamentals to learn more. Gross margin is 38%. This is a little lower than similar restaurant companies. Revenue has compounded at around 24% over the past 5 years and has reached over $914 million most recently. I love to see the steady revenue growth. It gets my heart all chubbed up. When we look at cash flow, we see a 295% CAGR over the last 5 years for operating cash flow. CAPEX has worsened at a 28% CAGR. As a result, free cash flow has finally flipped positive in the trailing 12 months. As operating cash flows continue to rise and CAPEX slowly declines, the free cash flow picture for this company is very rosy. Weighted average shares outstanding have increased over the last 5 years, going from 700,000 shares in 2021 to 118 million shares most recently. Cava has been busy diluting shareholders. Obviously, the majority of this dilution came during the IPO, but Cava continues to dilute their shareholders even after this. Now let's view return on invested capital. Return on invested capital has grown from 2.4% in 2023 to 6.1% most recently. While the current value is not great, the trend is promising. I would be very surprised if the return on invested capital is not much higher in another 12 to 18 months. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from -7 days in 2020 to -6 days most recently, Cava has gotten slightly less efficient over time. Still, a value of -6 days is not too bad. Now, let's look at Cava's debt. The net debt to EBITDA has normalized over time, going from -55.9 in 2021 to 0 most recently. Since Cava flipped profitable, they have done a great job managing their cash and debt. There is a lot to like about Cava. In any event, is it a buy? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, Let's go to the spreadsheet and write out some key values for Cava. It is a restaurant company with a gross margin of 38%. The 5-year revenue per share CAGR is negative 80%, and the free cash flow per share has flipped positive. While the decent gross margin is good, the negative revenue growth is due to the massive dilution. A return on invested capital of 6.1% is okay but getting better. Next, the cash conversion cycle of negative 6 days is very strong. Concerning debt, a net debt to EBITDA of 0 means that Cava could pay off its debt in no time. So from a fundamental standpoint, Cava is pretty strong. Now let's switch our attention over to valuation. The price to earnings growth, or PEG ratio, is 5, indicating that Cava is extremely overvalued relative to their projected earnings growth. To start, Cava's growth is pretty impressive. They went from a massively overvalued restaurant company that lost almost $100 million in a single year to now a growing company with improving profitability. They are dominating the fast casual space. With their unique menu and loyal customer base, their expansion plans are aggressive and they're showing impressive unit-level economics as they scale. Basically, each new restaurant seems to be getting more profitable. That's a recipe for success. However, there's a big catch: valuation. Cava's stock price has skyrocketed since its IPO, making it incredibly expensive. We're talking about a price-to-earnings ratio that is off the charts. While the price-to-earnings ratio of 283 at the time of this production, investors are betting heavily on Cava's future growth, and any hiccups could seriously impact the stock price. So, what's the verdict? Cava is a compelling company with strong fundamentals, but the high valuation makes it a risky investment in my opinion. That said, if I was already investing in Cava, I would probably continue to hold the stock and maybe wait for a more attractive entry point to add to the position. Overall, I like the restaurant and give this company a 6 out of 10 using my proprietary scoring system. Cava is a good restaurant company, but it is not the best. At this point, I would rather add to my current restaurant holdings than open a position here. But never say never. Many thanks for watching. What do you think about Cava? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.